Welcome to Trading Nation. I'm Kate Rogers. Wall Street's biggest bull sees another leg higher for the markets. Canaccord's Tony Dwyer joins us now. Tony, welcome and thanks for being here. So tell us how big...
Great to be here, Kate.
Thanks for joining. How big could September's stock market gains be? What are your thoughts?
Well, you know what? I wish I was good enough for September. I can tell you through the year end, we're going to have somewhere between a 5 and 10% gain. And I wouldn't, Kate, I'd be careful to say another leg higher. I think it's the same leg higher that started off of the April retest of that February low. I think that was a really important point. History showed back then, which I think we covered on Trading Nation, history showed that when you retest that kind of climatic drop, you ended up moving to new highs, and that's exactly what we've done.
So you're also out with a new note that says a recession and a market peak is years away. So what's the key driver behind your thesis?
So we've talked before about how from the initial date of an inversion of the yield curve, historically you don't go into a recession for almost 2 years. From the NFIB peak of a cycle, that's a small business optimism index from NFIB, from when that makes a peak, you have a 41-month lead into recession. And today, we highlighted the ISM Manufacturing Index, which showed the highest point of this cycle at over 61. Plus, it showed the highest level actually in the last since 2004. And that, when you look at the peak over since 1950, the peak in the ISM leads recession by 31 months, 31 and a half months, almost 3 years. So 3 different measures, Kate, are showing that you don't have to worry about a recession for about 2 years, maybe more. And as we know, you got to have a direction of earnings to be positive to expect stocks to go higher. And of course, positive economy equals higher earnings.
So your year-end target is 3,200. What would make you raise that at this point?
Honestly, you know, the market, our assumption on the multiple is 20 times. Honestly, if I get it right, I'm lucky. What I think is more important is the earnings number. Whether you trade at 19 times or 20 times, either way, it's much higher. The market is currently trading at 19 times trailing earnings. It's trading at the same multiple that it did, Kate, in December of 2016. So we haven't had a major multiple change on trailing 12 since December of 2016. So I'm just simply saying that by the end of this year and into next year, you should trade it in at least 19 times, I think 20 times. That's how I get my 3,200, 160 in earnings. And if where I could see upside to that is my earnings number is too low. The current consensus from Thomson Reuters is 162 in S&P operating profits. I think it could beat that, maybe 162, 163. So you could go higher than 3,200. It really depends on what the multiple is. And again, if 20 is too high, maybe it's 19, it stays where it is. Still higher from here.
So, Tony, tell us, what are your top plays right now?
Okay, we call it the productivity trade. If you've got inflation at the corporate level in a full employment economy, the only way to increase your profitability is to increase your productivity. Banks fund the productivity through lending or creating capital. Industrials implement and use the productivity through capital spending. And of course, technology is the brains behind the capital spending. So productivity is a really important theme over the last 2 cycles. When you've flattened the yield curve to the current degree, those 3 sectors outperformed a year after the initial move to 60 basis points in the 210 spread. They outperformed in 2 very different cycles. So we call that the productivity trade.
All right, Tony Dwyer, we will leave it there from Canaccord Genuity. Thank you so much for joining us today. And thank you all for watching Trading Nation. I'm Kate Rogers, and we will see you next time.
Hey traders, did you like that video? There's more where that came from. Scroll down and click on the links to the right of your screen. We publish new videos and commentaries from our experts every day. And don't forget to follow us on Twitter @Trading Nation.